We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodjevics. Joining me today is Gregor Gregersen, the founder of silverbullion.com.sg and the Safe House. Thanks for joining me today, Gregor.
Yes, thank you for having me.
Great to have you back on the channel. So, Gregor, I wanted to start by, getting your perspective and really walk us through the demand that you've seen the last year since before COVID and then during the crisis and even in the last month here during the silver squeeze.
Well, for us, COVID-19 has been amazing we saw a huge increase in sales, essentially. We're talking about 700, 800%. And I think in some ways we're sort of looking at, pre-COVID-19 and post-COVID-19 normal. We actually saw a little bit of an increase in sales second half of 2019. But then, February, when COVID-19 happened, that's really when things spiked up. And we've kept on seeing a big demand. It slowed down a little bit towards the end of last year, but it has picked right back up in December and the beginning of the year. Again, it's been very, very high sales. So from a sales perspective, it's been very good.
Mm-hmm. So how much of your business demand is actually from Singapore? Obviously, people might think that considering that you're in Singapore, you're a bullion dealer and a safe house in Singapore, that might not necessarily apply to them. So give us a sense of how much of your demand actually comes from Singapore and where it does come from.
So our focus from the beginning has really been the concept of systemic wealth protection, meaning that for individuals who have enough gold or silver that they want to put some of it in a different place, different jurisdiction, those tend to be our primary customers. So over 90% of our customers are people from the United States, from Europe, from Australia. So these are really the primary locations. Canada to some degree. So I think the local demand might be around 10%. And the value propositions that we essentially built over the last decade and so on is to tell somebody in a different jurisdiction that if you store the bullion in Singapore, you're essentially buying that gold, and we are going to make sure with every possible way that we represent as little to no counterparty risk to you. So especially when it comes to jurisdictional issues such as gold nationalization in the US and so on. So we very carefully built the company with the processes and the way we store it to basically protect you and make it a very safe place to look at it. So it's a way for people to diversify the gold and silver holdings into another country. And I would argue throughout the world nowadays, essentially there are two countries where it makes sense to put some gold and silver, and that's probably Switzerland and Singapore. And so we've been very heavily focusing on Singapore and only Singapore.
Mm-hmm. So, Gregor, can you elaborate on that a little bit? What makes Singapore such a secure jurisdiction, and why, let's say, is gold nationalization such a risk, and Singapore is a great place to kind of mitigate that risk?
Okay. Well, first of all, nationalization, the reason why I think there's a real chance of that happening again. And, everybody is sort of worried or scared about the United States nationalizing, because if the United States says jump, most countries have to jump. And so, if Botswana does it, nobody cares. But the United States does it, it's really important. So, and if you look at the United States, why would the United States do that? And so many people say gold is a barbaric relic. Who would care, right? Mm-hmm. But the problem is our financial system is all based on trust and only trust. And the United States currency is only based on trust too. In 1971, it officially abandoned the gold peg. And so it's only backed by the full faith and credit of the United States. If people are going to start doubting that faith because there's so much money being printed, and now with COVID-19, we're talking about endless trillions per year. There's a risk that people might start doubting or might buy less of that debt. Less debt is being bought and more money has to be printed. And at some point, some people might not accept the US dollar as a payment, also prefer something else. And there's a chance that this might end up becoming a catalyst, and suddenly there might be a loss of trust. So if you have a loss of trust in the currency, it's not something that most people can't even fathom or imagine, because the United States has been such a reserve currency and strong currency since 1945, that people forget that that's a possibility. And if it does happen, then like any government, you're going to have to make a new currency backed by something that people can trust. And gold and silver are most likely going to play some sort of role in that new banking. That's traditionally how countries which have problems get out. That's how Germany got out of it back in 1923 when we had hyperinflation. Mm-hmm. So the United States did it once before in 1933, and back then they were on a gold standard and they wanted to print more money. So they said, well, we make it illegal for people to own the gold, then we can just print more money, devalue the dollar, and that's how we print more money. Nowadays, it's no problem to print more money, but the problem is that so much money is being printed that there might be a loss of trust. And so for people which look at the situation and think that this is a real possibility, they will start to think that we have this is what we call a systemic crisis, where it doesn't matter where you put your money. If it's in US dollar, you put it in bonds, you put it in stocks, you put it somewhere else within that financial system, chances are you're going to get hurt one way or another. So the idea is you take some of your assets, some of your wealth, and you put it outside of that. And that can be in real estate, for example. It can be in land. But the beauty of gold and silver is that it's very liquid. So it behaves a bit like a financial asset, but if you store it the right way, it's also something you can own outright, like a private property, basically. So it gives you the best of both worlds. And that's essentially what we are trying to build here in Singapore. So if in the United States you have a nationalization, then it makes a lot of sense to have a bit of gold and silver outside of the US, and to put it into a country, and not just a country, but store it as a company that does not have to follow US law. So they can basically say US law is a foreign jurisdictional law, and can basically tell the United States, go talk with the Singapore government, because I don't recognize your authority over me. And every globally operating company cannot say so. Every bank has to follow US law no matter what. So that's what makes us special. The fact that we are just a local company which very carefully managed jurisdictional exposure. Mm-hmm. So why is Singapore a good place? I would say there's three primary reasons to sum it up. The first one is Singapore is a very rich place. And so they don't really need to nationalize that gold. And it's important to understand why Singapore built up that wealth. I mean, you might compare it with a country like Qatar, which maybe has similar per national income, but Qatar basically sits on a bunch of gas, and they're just selling that. Singapore has no natural resources. They didn't even have enough water to start off. So they have to be entrepreneurial. They have to have an excellent government. They have to be efficient. They have to be trustworthy. And, it's sort of a Darwinian law. If Singapore were not to be a really good country, running things really well, they would not have survived. And so of all the countries I lived in, I did trips around the world looking for a place to live. When I found Singapore, and I read this book From Third World to First World by Lee Kuan Yew, which was Prime Minister here, which was basically an instruction manual on how to build a city-state. Once I read that and I understood how Singapore works, I just sort of fell in love with the place. And here's a place where the government seems to work better than private business, which is unheard of. But it really seems to be this way sometimes. But what you have to understand, the key of all that wealth comes back down to trust. Because Singapore is basically where all the multinational corporations have the HQ or the Asian HQ. Wealth flows into Singapore. All these industries are in Singapore. A lot of it is based on trade, internationality, and so on and so on. So it's all based on trust. So if Singapore ever were to nationalize gold, they will basically do economic suicide. because they will be betraying the trust that builds them. So, A, they're rich, they don't have to nationalize. B, say if they did, they would basically destroy the economy because it's all based on trust. So Singapore will be the last place to do a nationalization. And then thirdly, and that's what most people don't know about, when they think about Singapore, they might think of it like Liechtenstein or Monaco, or, some little state like this. And, these places would have like a little police force or something like this. And so the question is, why doesn't the neighbor just, move in and take over the country and say, thank you very much? And that's where, it just shows Singapore is actually a medium-sized military on the global world scale. Give you an idea, we have a 2.5-year draft here, and we can mobilize 950,000 troops within 2 weeks. The military budget in Singapore is about 3 times that of Malaysia, which is a big neighbor. And the Singapore Air Force, to my understanding, is actually bigger than the German Air Force. And I used to be in the Luftwaffe. I used to be in the German Air Force for a while. So it is bigger than the Australian. It's actually the biggest Air Force in Southeast Asia now, bigger than the Australian one. So they have German submarines, they have the American Apache helicopters, F-35s now, I have F-15s sort of landing all the time. So they're very well defended, and they have a policy similar to Switzerland to always be a neutral country. So in that sense, it really is the Switzerland of Asia. And, just like the coronavirus situation which we have now, we basically had 20 people die off of it. And, we basically have none of it here for the last, since August or something. So it's just, they just do a very good job at things. And so if you have to find a place, which will be the last place to take your gold or silver, and that is well defended in a neutral country and, relevant to enough countries that it's not going to be, it's going to be safe, it's going to be Singapore. And that's what makes Singapore such a good place.
Mm-hmm. So Gregor, when we look at people trying to secure their wealth in gold or silver, how are you looking at premiums, and how are they different on the retail side versus the LBMA side?
Yeah, so that's a very important question, because there's been a lot of discussion about the web about the premiums going up and being so high and so on, but people need to realize that they're really two very distinct markets. There's the retail side, which is the maple leaf coins, the 10 ounce, the 100 ounce silver coins, the 100 gram gold, the 1 kilo bars, so somewhere in between, I would say. And then you got, the gold side. On the LBMA side, you have the 400 ounce gold bars, which are like over $1 million. You have the 1,000 ounce silver bars. Those are basically the big sort of bars that are either too unyieldy or expensive, for as a retail item. And so one thing that's very important to understand is when it comes to retail bullion, there's always a bottleneck that means that there are only so many refineries and mints that can actually make these coins. So just because you cannot get maple leaf, it doesn't mean that there's a world shortage of silver. It just means that there's a shortage of maple leaves. And if maple leaf prices, are going up by $5, that doesn't mean that the LBMA bar is going up as much. And so it pays to sort of look at how these two different markets evolve. And what we saw, when COVID-19 happened, sales ended up going up. It ended up getting very difficult to find retail bullion. Recently, earlier this year, in the US especially, it's gotten very difficult to get maple leaf coins, American Eagles, and so on. Agnex was all sold out. But we can still get LBMA bars. The premiums have been going up a little bit, but they're starting to fall a little bit now again. And just to give you an idea, when we order these bars, we have to order 10 tons at a time. So we are talking about 320,000 ounces at a time. And we literally have the silver coming in on a container. The first time we did it was pretty cool. You get a container full of silver, but now it's become pretty routine. And But these things come by ship now. So it takes 3-4 weeks anyway for delivery, but that 3-4 week delivery time is still there. When talking about maple leaves, they come by plane. So, your variability in timing changes. And to a bullion dealer, you like to be able to restock quickly. So that has also an influencing price. But to get back, to original question, essentially these are two very different markets. And I think we can only say that we're going to have a real shortage on silver when we see the premiums of these LBMA bars really going up. Because while refineries, we might have 30 refineries doing silver, we might have 3 refineries doing retail bullion. So there's a lot more supply on that LBMA side. But when such runs short, then things are gonna, they're gonna be fireworks.
So just to reiterate there, Gregor, you really haven't seen a massive, let's say massive jump or a meaningful jump in the premiums on the LBMA side that would indicate to you that there's a real shortness of those 1,000-ounce bars?
Yes, for us so far it hasn't been. What has happened is in gold. If you remember when COVID-19 first happened in February or March last year, say LBMA closed down, LBMA exchange in London. And that caused a lot of havoc for these big banks because they had to do delivery in the United States, and they were going to get the contracts in London, and the market was short. So basically they had to come up with gold bars. And they couldn't come up with gold bars. And so these banks, which would normally pay maybe $1-2 above spot for gold, suddenly were paying as much as $50 or $60 in order to make good for it. And I know for a fact some of these banks lost hundreds of millions of dollars on this because they either had the option of defaulting or finding whatever gold they can. And US distributors made a fortune out of this. I spoke with some of them. So there has been a real shortage of gold for a while. And what we saw is actually a reversal of this trend where normally you would have gold coming towards Asia and to some degree silver. And what we've seen is the premiums of gold being higher in the United States than in Asia. And we actually saw people shipping gold back from Asia back to the US. So that's what happened last year. We are now, so for silver on the retail side, there's definitely been big shortages that have been widely discussed and advertised and so on. But on the supply side, it did look a bit tight for a while, but we haven't seen any huge drastic jumps yet. And maybe people ought to start buying these 1,000-ounce bars. Yeah.
Absolutely. And, when people have, let's say, enough money saved up, then they can maybe get those, right, Gregor?
They have low premiums, and, why not? I mean, I'm not sure whether Appnex, is actually offering to ship those, but, if you can get the 100-ounce bars, why not do it? I took delivery of some bars from Comics. I wanted to try that out a while ago. And, the problem with that is that Comics put in a lot of rules, limitations, and things that prevent you from taking delivery of it. So if there's a shortage, it will be hard to get it. But, you can try. I remember I got a 1,000-ounce bar, and it was the ugliest bar I ever seen. It was this brown prick, and nobody would ever steal it. I mean, I was just afraid people would throw it away because it was so ugly. I mean, there were stickers on it everywhere. It's like 60, 40 years, 50 years old. But yeah, I managed to get delivery of it once. So to test the system, to understand how it works.
Excellent. So Gregor, as we talk about gold and silver, you have some considerations around ratio trading. So what are those considerations that you have when thinking about switching back and forth from gold to silver?
Yeah, so I think throughout most of history and in nature, you have a rough ratio of 16-1 between silver and gold. So roughly speaking, you have 16 ounces of silver for every 1 ounce of gold in nature. Now, over the last century, gold has had a bigger role, and that ratio ended up becoming more like 60 to 65 to 1. And especially since, the United States made it illegal to trade gold. So basically we just had this pause between 1933 and 71. I mean, it started trading 71 over the last 50 years or so, exactly 50 years now, right? Since 1971. We basically had this average ratio of around 60 to 65. And what's this ratio? And it's been going between, 80 on the high side, meaning silver is cheap, and maybe 45 on the low side, meaning silver is expensive compared to gold. So the idea is that when this ratio starts heading higher, then you should buy silver instead of gold. And you should consider maybe selling your gold for silver if that ratio goes really high. And if the ratio goes down, meaning say below 50, 45, you should buy more gold and maybe even sell your silver for gold, because over time these ratios always tend, to readjust itself. And to give you an idea, if you would have followed a 50-80 rule, where basically whenever it goes to 50, you sell your silver and go into gold. When it goes to 80, you sell your gold and go into silver. You would have done it since 1985. You would have more than quadrupled the amount of gold or silver you have, on top of whatever appreciation you have. So it's really a smart sort of thing to do, because you're just buying whatever is cheaper compared to the other one. And in the case of silver, last year I was sort of kicking and screaming, telling everybody buy silver, buy silver, buy silver, because this ratio went to 122. But silver has never in history been as cheap as it was last year. And that's when silver hit about $12, 12, 13 US dollars. Now silver is back to 25. So that ratio has now fallen back to around 65, 70. So silver is more fairly valued yet historically with gold. Personally, as name of our company would imply, silver bullion, we have a bias towards silver. But it's that's basically what the ratio is about. If you were to decide what to buy, I would, at this point being around 65, I would still recommend you buy silver, because I expect it to be going up faster compared to gold, when we see the next run up.
Something you also speak about is the gold to platinum ratio, Gregor. So can you tell us a bit more about that, and tell us if platinum is still quite hard to get right now?
Yeah, so platinum, as most people know, normally you have prices, and, platinum is the first price and gold is the second and silver is the third price. So platinum was always considered more expensive than gold, is rarer than gold. But, something strange happened whereby right now gold is about twice the price of platinum. And I'm not aware of that happening before either. So platinum was really cheap compared to gold. The reasons for it, the best explanation I heard essentially is that platinum is mostly used for catalytic converters for diesel engines, whereas palladium is mostly used for combustion for gasoline engines. So with Volkswagen and these other scandals, and a lot of countries putting in more restrictions on sale of diesels, the demand for diesel cars has decreased, and somehow investors sort of jumped the gun and thought, well, nobody's going to need diesel anymore. Platinum anymore. That's the best explanation. Or maybe we have the financial shortage, we should push this metal down. But the strange thing is, there's been a lot of disruptions in supply. In South Africa, some of the biggest mines, they have labor strikes, other issues. So really, supply is really down. And yet this metal keeps on falling, or it has fallen so much and doesn't really go up much yet, and compared to gold, so it's really cheap. So I think platinum is a smart buy. Palladium, on the other hand, is just going through the roof. Palladium was always maybe 30-40% cheaper than platinum, and now it's 3 or 4 times the price of platinum. So, and the other funny thing is, it is possible to use platinum as catalytic converter for gasoline engines. So it's just a matter of time for that to happen. So My guess is it would be a case to be made to maybe short palladium and go long on platinum, or maybe just buy some platinum if you're going for the physical, because it's very cheap. But that's assuming you can get it, because as I mentioned, there have been a lot of disruptions on supply, and it's actually very difficult to get. So especially bars, when it used to be platinum is always a much smaller market compared to gold. It's harder to get, it takes longer, but you will normally be able to get it in a couple of weeks. Right now, maybe 6 weeks, 7 weeks. Sometimes we can even put an order in. What's a little bit more available are coins, say Australian platinum, I think it's kangaroos, or no, it's a different animal, but it's a Perth mint coins, for example. Those are still able to get some of these, but it's a bit of a higher premium on the coins, but it is definitely a shortage. So we have some people buying, and it just takes 5 or 6 weeks, and they're able to get it, but it is definitely not easy. So, and actually, to add to that, we are just I believe we get a new supply coming from Heraeus with 50-ounce bars. It's actually a kind of LBMA bar. For whatever reason, they're doing it 50 ounce. So it's not an exact weight. Each bar we have to adjust for what the actual value is, but we should be able to get some supply in through that. So yeah, it might be getting a bit better.
Interesting. So Gregor, as we think about, let's say, the price manipulation that it has gotten so much attention in silver, can you tell us and explain to us from your point of view how GameStop had or use GameStop as an example of leverage in the system, and how that net short position works the same way in the silver market?
Yeah, so my early history, I used to be, I studied finance. I used to work with quants in the structured product desk. I used to build derivatives, basically. So I thought I knew the financial system to some degree, but when I heard that GameStop was shorted by 140%, I mean, I just scratched my head. I mean, how is that possible? Because if you only have 100 shares, shorting means you're basically borrowing somebody's shares, you're selling them, and later on at some point you're going to have to buy it. So you would think there will be some rules that you cannot borrow non-existent shares. But in reality, what's been happening is that people have been borrowing shares from somebody who's a long position who offered it for lease, and then they sold it, and then they lent these shares that they sold to somebody else who did the same thing, who did it again, who did it again, who did it again, who did it again. So it's ridiculous, really. And so if that's happening in the financial market, which it's very easy to keep track of this, right? When you have a physical commodity, it's easier to have gray zones and so on. But when you have stock and it's happening in a stock, I think it was sort of a very surprising example of really what I consider the decay in our financial system, because I think if you asked anybody 30 years ago, if such would be allowed, if that makes any sense, morally, legally, or systemically, I would say you would have said a very clear no. And nowadays, it seems to be common practice. So I think it's an indication of really how leveraged, interdependent, and fragile our system has become. And this whole GameStop squeeze, I kind of love it, because having 140% shorts makes no sense whatsoever. And the idea is that people get organized through social media or other methods and actually push up that price. I think that kind of changes the dynamics for these wealth managers, because suddenly, they have one more variable to look out for. And so I kind of love this whole process. But of course, with GameStop, the problem is it's still a company share. It can go down to zero. At the end of the day, they can change the rules and only allow sales. They did with silver actually back in the 80s. or do all kind of other things. You cannot take delivery of the shares, So it's always going to be a very risky thing to go long with it, and people might end up losing a lot of money. Silver is very different because it's a much bigger market. It can be a physical good. So you're not captive to the financial markets the way you are with, say, GameStop. And what I see in silver is, since I started this in 2008, when Lehman Brothers went bankrupt, basically people rushed out to buy physical silver. I was scratching my head and kind of thinking, why is they doing that? And then when I went to the store to try and buy some silver, I couldn't get any because it was all sold out. And that's, the silver price kept on falling, yet you couldn't get anything. And so that whole price, supply, demand system, it didn't work. And that was very weird, right? Because normally you think if a good is in high demand, the price will go up. It's the opposite happened. And, it took me a while to really understand all of this, but once I did, it cleared up any doubt for me. So that's why I went all into physical bullion and storage and the wealth protection, because it basically became very clear to me that owning physical means that you don't have counterparty risk. You actually own that bar under your name, and it can't be taken away from you. If it's taken away, it's called stealing, and people go to prison for stealing. But if it's a financial instrument, then most likely silver isn't even there. It's even if it's an allocated system, and even if you have a serial number, you might not know if that bar actually is something that has been leased, like these GameStop shares. Is it a lease bar of a lease bar of a lease bar? And so, when the question came up, how can the SLV add, I think it was 1,000 tons or so, on a weekend? Well, clearly the bullion doesn't physically go anywhere. And I can talk from experience because we just recently moved 400 tons from our old vault to our new vault. And, that took 4 days and a lot of effort to move 400 tons. So, and it took months of preparation and insurance and other things. So you can't move 1,000 tons. So the question then is not really does it move, because obviously it doesn't move. The question is, what is there and what is it really that's backing it? And, if there's a list of bars, well, who else has a claim on that bars? And that's the question where there isn't a central registry, really, as far as I know, that will really answer that question. So it's an extremely opaque, non-transparent system. And for all you know, that bars that you think you have a claim on, another 10, 20, 100, 200 people I know people might have a claim on. And what that means is basically that paper asset you have, it's only going to be good as long as the entity telling you that you have a claim on it actually can deliver. And most of the times they actually cannot take delivery, but you can sell it for cash. So really it's only a paper position. And so it's important to understand that difference, because it's when we have a financial crisis, that's going to make also the difference. And, if I might add to it, there's a fantastic video online from Mr. Bass. He was a fund manager, or maybe it was a private wealth office. I sort of forgot what the name of it was, but either way, he had $1 billion worth of long position in COMEX. And at the time, he gave this interview, and he was saying at the time, COMEX had about $80 billion worth of long position, paper position. And the $80 billion were backed by 2.7 billion worth of physical bars. And he kind of figured, well, what if people are going to start asking for delivery? And he also mentioned, by the way, and if I keep on running these future contracts, it actually, he realized it was costing them 90 basis points, so 0.9% per year, to keep their position, because you have to keep on switching from one future contract to another one. So he kind of said, hey, since I'm keeping this long term anyway, it makes a lot of sense for me to take delivery of these, because you can store it at maybe 35, 40 basis points. You save more than half in fees, and you own the things instead of just having a claim. And so he actually went to COMEX and said, hey, I want to take delivery of $1 billion worth of gold, please. And lo and behold, he managed to actually take delivery of it. And so he explained in this interview that he basically went to the COMEX, to the house, and he asked the guy in charge of the physical holdings, you only have 2.7 billion. What's going to happen if you get 3 or 4 guys like me asking for the $1 billion worth of gold? And so apparently he said, that never happens. He said, well, what if it happens? What's then? And the answer was, well, price will solve everything. And what that means is basically said if 10 people or 80 people in this case are going to be running after $1 billion worth of gold, whoever bids the most might get it. That's basically what it means. And so, when people say that there might not be any gold behind or any silver behind the position that you think you have, that's not a conspiracy theory. That's, plain fact. And if you read the small print, you have it black and white everywhere. So it's just that when you have an example like GameStop, where 140% shorted has been shorted, it just makes everything so much worse. Mm-hmm. And to get back to your question about the price determination, basically the silver and gold price, especially silver price, is determined not by physical supply and demand. It's determined by, these future contracts in COMEX. And if some actor decides that they want to push the price down, if they have, say, $1 million, as an example, they can leverage it up 10 times. So they can actually sell $10 million of imaginary silver and create $10 million worth of selling pressure. And if somebody buys the real thing, well, if they have $1 million, all they get is $1 million worth of silver. So the shorter basically is pushing down 10, say physical buy is pushing up 1, and so you actually have a $9 million downtrend. And that's why, I always say there's no relationship between the price of silver and the physical supply and demand. So short term, we're really sort of in the throes of what these paper guys are going to do and not going to do. But long term, the reality is there's less and less of physical silver, and as more people understand that and take delivery of it, the less there is to back all of this. And, at some point, people are going to stop trusting this thing. And whenever the time comes that Intel or Tesla or anybody else who needs silver for industrial purposes can get it, then it's going to be fireworks. Mm-hmm. And that day is going to come because, especially as people start doubting US dollars, they get more interest in gold and silver. And that's going to be, push silver and gold up, and then you're going to have some other old squeezes, basically. So long term, my strategy is buy the physical, put it under your bed, put it in a vault, put it in Singapore, maybe in that order, and just sit on it and wait. And don't expect things to happen next week or next month. It's going to take its time, but there's not much you can do wrong. Silver and gold will not go to zero. Gold, on average, returned 8% per year since 1971. Most people don't realize that, but that's how much it's been going up. It's an appreciating asset. It doesn't need to give you interest because it increases in value anyway. And silver is cheap compared to gold, so it's going to have some more better performance, I believe, in the future. So short term might go down. Long term, it's an excellent place to put your wealth, and it's not just an investment; it's an insurance.
And these are all great points to really kind of point towards the fact that you don't necessarily try to time the market, right? To buy gold and silver.
Well, myself, I'm sort of more a fundamentals guy. I mean, through personal experience, working for some of these companies, I was a senior data architect in Commerzbank in Frankfurt, when Lehman Brothers went bankrupt, and I saw the aftermath of all this from the inside. And now I've been in Bullion and running a vault and storing about $600 million in gold and silver. So I've seen all of it, and I know what's happening. I don't want to predict because, to be honest, back in 2008, I would have thought that by 2021, we would have had some sort of reckoning happening with these numbers, but we didn't. It always takes longer, and but I'm pretty sure that this decade, if you look back at 2000, in the year 2000, I mean, nobody would ever question the validity of the US dollar. In 2010 as well, it's still quite strong, but every few years, that strength is sort of weakened. I think this decade is going to be a decade where gold and silver are going to play a big role, and we're going to see some major shifts. So I think it's very prudent to own some physical.
Mm-hmm. So, Gregor, as you mentioned, you guys were just moving. So silver bullion has moved from the safe house to what's called the reserve, which will be the largest vault in the world. So tell us how this new facility really shows your main focus is silver and why you had to make that move.
Yeah, so just a slight correction. So the safe house is still there. Essentially, silver bullion is sort of the parent company, and the safe house is a subsidiary of silver bullion, which is basically where we store bullion. Now, the reserve is this building we built. I mean, we bought. And because this facility is so large, it's 180,000 square foot, we expect to not just have ourselves in it, but some other logistic providers. We're talking with a number of them. I mean, I'll give you an example. We're going to have 15 gold vaults in there for a capacity of 500 tons plus 2 vaults. So we have about 50,000 square foot, which we're looking to rent out, in future vaulting areas. So because of that, we had to come up with a new name. And the safe house will continue to be our vault within the reserve. Now, the reason we had to move is the safe house, which was located at Chai Chi, which was the name of the location, it had a capacity of about 600 tons. But because we had these large safe deposit boxes and so on, we really only had about 450 tons of practical capacity. And last year we added 110 tons of silver, which got us up to about over 400 tons of silver, which meant by middle of this year we are going to run out of space if demand continues as it is. And gold is easy to store. I mean, it's a security issue, but it's small. Silver is about 100 times, requires 100 times more space. It's not as dense as gold, and it's a lot less valuable. So you essentially, when you store silver, you have something between a warehousing operation and a vault. Because to make it efficient, you have to have these heavy-duty lifter machines that can lift at least 1 ton or 1.5 tons. And we have these pallet cages that we use, to store it in. So, and so what becomes a really critical factor when you build a large vault where you want to store silver is what's called floor loading. So floor loading basically tells you how much weight you can put on a floor without it starting to crack or collapse or something like that. It's kind of important. So, and it's measured in kilonewtons normally by square meter. So a typical floor, an office floor, has about 3.5 kilonewtons, which means you can put about 350 kilos per square meter. So it's about 750 pounds or so, 11 square feet roughly in space in US terms. And you want it to be as high as possible to store silver efficiently. Now, if you want to get really good floor loading, you normally end up topping out around 30. So it's about 9 to 10 times as heavy as a normal floor. We got this building, we have a floor loading of 90. I mean, there are very few buildings in Singapore, or probably anywhere, which has that kind of floor loading. You might find it in some of the port areas, where they have to do heavy-duty commodities and so on. We basically have a 2 yard thick, concrete slab below to distribute that weight. So it's almost this massive sort of building. And it has a huge central room, which is about 19,000 square feet, which is about 100 feet high. And this whole building was built around this huge central room, which basically used to be a major logistic system. It's sort of like what DHL and UPS or Federal Express might be using in order to have like a major logistic system. And the company we bought it from, they basically used to be a major electronics distributor, and they used to do this stuff internally. And I guess they decided to outsource it because it's cheaper. And now they have this strange building that they were trying to sell. It wasn't so easy to sell. And then, coronavirus came around, COVID-19, and that helped to tank the market. And, as we were looking for a place to build a vault, and, a vault, you have to have security, you have to have a certain minimum look. You don't want it to be in a dumpy area. You don't want to spend too much, and you need to have floor loading. And these are all factors that get together, which make it very hard to find a good building. And, when I saw the building, at first I thought, holy shit, this is way too big for us. But then every building we saw after that just seemed too small. And we realized this is sort of, I think we got really, really lucky here, because we managed to get the building at about 35% below was trading before. And in Singapore, to get a building, it's actually a long process. You have to get, governmental sort of approval for it. So it took about 5 months, but we get also approvals. Singapore government is all like, giving us a big thumbs up on it. And basically, building is ours now. And we already moved into the third floor because the third floor is the smallest floor, and it's about 3 times the size of our old vault, and there's twice the floor loading for old vault, but it's the smallest. And that one was quite easy to secure. We essentially got the insurance inspectors to come in, give all the products. It's about a 4-month process to get it all done. Then we had concurrent insurance on both locations. We moved all the Bullion over, then gave up that insurance. And then we had Ernst & Young come in and basically do an audit of all the Bullion to kind of prove that it's all there. So that's all done. We're in the third floor now, and we are in the process of preparing renovation of the main building. So, and that process will probably end in the first quarter of next year. And by the time that will be done, we will be able to store 15,000 tons of silver. To give you an idea, it's about 480 million ounces of silver. JP Morgan is rumored to have about 130 million, so we're about 3.5 JP Morgans basically, so we can store here. We checked with Refinitiv, which is Reuters, which basically keeps track of vaults. And they said in the Western Hemisphere, we're definitely the largest. They don't know whether the Chinese government has something like that, because they're quite hush-hush about it. But once they start comparing it with the Chinese government, you got something big. But essentially, we will be stacking the silver 12 meters high. It's about almost 40 feet high, using specialized, it might be a very narrow track sort of logistics systems that go up there. And it will basically mean that because of that efficiency, we can probably make good offers to some of the large funds out there, because we can probably store cheaper for these bulk sort of customers. Even though Singapore is a high price location. And so there's some, we're sort of becoming a big fish in a small pond, the pond being silver. But we think that pond is going to become very important in the future.
Absolutely. So, Gregor, can you tell us a little bit about another project that you're involved in of Cash Gold? And it's a fully backed token cryptocurrency, right? That's backed by gold and fully redeemable. So, tell us how this, really plays an important role in having some liquidity and utility to your bullion. Yeah.
So, I guess the first question is, why do something like this in the first place? And I guess there are 2 practical things that you can do. So there's sort of the crypto crowd, and then there's sort of the gold crowd. So from a gold crowd perspective, I think we had a number of questions, people asking us. So if the financial system goes belly up, and I can sell my gold in Singapore, but then you cannot send me the money into the US, say, because the banks are closed. How do I get my wealth out? And so one way to look at, or one alternative, which I think is worthwhile sort of having as an option, is to basically convert that gold into something like Bitcoin or something else that will be acceptable, at that point in time in the jurisdiction where you live. And so it's an alternative way of a backup system for the financial system is down. So that's one important reason why we are interested in this. And another thing specific to cash is we always designed it not really as something that's just about us. We designed it as a technical standard. I think of it more like, say, way Visa or MasterCard, basically it's a payment system. And then you get all these banks using it in all these merchants and so on. But Visa and MasterCard, they're not really in the business of selling MasterCard cards or getting people to use them and so on. They provide the technology, set the standards, and then have others do it. And so because of our background in software engineering, and that's sort of my background, and we have a subsidiary, by the way, called Little Bit with 6 developers, which, spending most of my time actually in software development. And we have a long set of experience with tracking systems and crypto as well. So I kind of thought, how would I, if I start from a fresh slate, basically, from first principles, how would I build something using the best of tracking technology and blockchain technology to create a way to build a token that can truly be trusted? And the way you do that is you have to have systems that basically are so difficult to defraud that nobody will do it because it doesn't make sense, because so many other systems are so much easier to defraud. And so I spent 2 years basically taking all that decade-long experience and now had in gold to build a tracking system called GramChain, which is, we got some patents pending on it in a little bit, which basically ensures that the gold is there. And we created it so that it doesn't just run in our vault. We have it deployed in Loomis now, which is one of the biggest vault operators in Switzerland and throughout the world, actually. In Prinks, we have opened an account and they're okay to use the system. Most people probably know about Prinks. And Dylan Gage, IDS Dallas. Dylan Gage is one of the largest bullion distributors in the United States. They basically have 2,000 bullion dealers that they deliver to all over the world. So we working very closely with Dylan Gage. They actually bought into cash. So they're co-owners of the system, which is giving us basically a way of distributing and logistics. And we are basically looking at having other parties sort of come in to create a standard. And one of the interesting thing is you can actually deposit, say, gold bars with Dylan Gage in Dallas. You put it into the cash account. In return, you get these cash gold tokens. Now, you can redeem these cash gold tokens at any other location for any of the gold in the system. And all that gold, you can actually go on cash. You go to cash.gold, cache.gold, and there's a tool called the Explorer. You click on it, and you can actually see each bar with the serial number. You can click on it, you see the photo. For each one of this, you see the different events of when it was scanned, the vault documents, and so on. So it's an extremely transparent system. And you can essentially go take your tokens, and you can choose which bar you want to take delivery of, say in Singapore. So instead of having to ship a bar from the United States to Singapore, you just deposit it in Dylan Gage in Dallas, and you take delivery in Singapore. Now, if you want to sell that bar, you have the option with the cash marketplace to actually say, I have a bar, I have so many tokens. Now, if people buy the tokens directly, that's complicated because of regulatory issues. But you can convert it into a bar, and the cost is only 15 or 20 basis points, 0.2%. So it's really low cost. And then you can basically say, I have this bar, who wants to buy it? And also bullion dealers doing silver bullion basically can put in a bid. And whoever buys it then basically gets the bar. And what the bullion dealer is buying is not the token, it's the actual physical bar. So it flows into the normal business volumes. And the bullion dealer doesn't really have to worry about, whether it's legal or illegal for them to use a cash gold token. They just get a physical bar. They need to know the identity of the person redeeming it, and there's an AML KYC check and so on. But once that is done, it's just like the buy and sell of any other physical item. So it's a clever way to basically take the crypto world and combine it with the gold world. And when you start one of these things, the problem is always you have a chicken and egg problem, because nobody really is going to use a token unless other people are using it. But one of the cool things about cash gold token is you can take easy delivery, which means you're basically getting into gold liquidity. You can sell at any point in time, not because people are clamoring to get the token, but because you can convert it into a gold bar, have it shipped to you, or sell it to one of the bidders which are willing to buy the gold bar. And there's a lot more to all of this. And, the gram chain system, I mean, I could talk for hours about it, but, especially for clients or for people who are interested to understand how it works and why it works and so on. And the design philosophy without it. We have the white papers. We actually made some videos explaining it, why you can trust it. It's a big overview, the 4 things that are special about this. And one of the directors of Cash, by the way, is the former deputy director of the Central Bank of Singapore, MIS. So we got some, pretty credible people, who's also become one of the primary lawyers, I think, in Southeast Asia, and experts on legal matters on crypto. So we put in a lot of work to have a token which is not considered a security, and yet is regulated. And it's a very special status that we managed to get. So I'm kind of trying to get people excited and look into it. But of course, it takes a while to really get into it. So you have to, maybe take a day and have some keen interest into it. But I do hope and believe that cash gold token is going to become something that in the future, who knows, it might become the Visa of gold. At least that's what, we're trying to give it a shot and create alternatives, to what we have nowadays, because I think what we have nowadays, is much too, should be improved.
Absolutely. And Gregor, tell us a little bit about kind of the experience that you took from building the peer-to-peer lending system that you were basically able to use in building the cash token. You have a loan system that you built for people to actually loan against their bullion, correct?
Yes, so that's something completely different. But essentially 6 years ago now, 5 or 6 years ago, we had a customer who stored with us, and we had a bunch of gold, and he said, look, I need some cash. I don't want to sell my gold. Can you give me a loan? And well, we couldn't, because we were under a financial institution. We cannot give you a loan. But so we said, oh, well, let us see what we can do. And the first thing you will think about is, let's go to the bank and let's see if the bank will be willing to maybe give him a loan, and we have the gold as collateral. And it was just a nightmare. I mean, after 1 year, it's a back and forth with the banks. There's so much bureaucracy. And then the person we're dealing with, he left the bank, then we had to start from scratch. And since the bank wanted to have a monopoly over everything, I mean, after a while, it just didn't make sense. And that same, and then we figured out that there's a much better way of doing this based on Singapore law. And essentially, what we can do is because it's all physical items, and because our inventory system is not based on us owning the bullion and us owing it to a customer, but we sell the bullion as a physical item to the customer. The customer is the legal title owner of private property under Singapore law, and we are just an agent storing it. Because of that, we can basically act as an escrow, which between a lender and a borrower. So we are not really lending anything. We are just said middleman basically. And then we said, hey, we can just go to our clients and say, hey, you can lend to another one of our clients using that person's gold as collateral. And so we basically just set the rules on how that would work. And essentially what we wanted to do is we wanted to build a very safe system. And we essentially said, if you have $100,000 worth of gold, then you can get a $50,000 loan from another customer. And that means 200% collateral backing, basically. And we said, if it ever goes down to 125, we kind of say a notice and saying, hey, it's starting to get lower. And if it goes to 110, then we would liquidate that gold, meaning we will sell it to make sure that the lender always gets his principal and his interest back. And that makes it very safe because we have the gold. And as you know, we test the gold to make sure it's the real thing. So there's really very little risk into it. And then the question was, well, what about the interest rate? And that's where we said, well, why should we decide what the interest rate is? We just let the customers decide. So basically, if you go to our website, so bullion.com.sg, you go to loans, you would essentially see a bid and ask. And, we have 1 month loans, we have 6 months, 12 months, and 24 months. We have three currencies, the euro, the US dollar, and the Singapore dollar. And you can essentially, if you have $100,000 worth of gold, you might say, I want to borrow $50,000 at 3% per year interest rate. That's what I'm offering. And a lender might say, well, I have $200,000 hanging around here. I'm lending at 4%. So no deal, right? But you will see a bid at 3 and ask at 4, maybe that's around. But and then maybe the guy says, okay, well, I'm willing to lend at 3.5. And maybe the lender says, okay, that's good for me. And then the actual contract happens. And because it's a one-person to one-person loan with collateral, which is owned by just one, there is no aggregation. Because there's no aggregation, the Central Bank of Singapore, called MAS, basically says that's outside of the scope. And we're allowed to do that without becoming a financial institution. And that's essentially how the peer-to-peer lending came about. And, it has nothing to do with leasing. Leasing is something completely different. Leasing, is something that I always warn people about, that you should try to make sure that your gold, or what you think is your gold, is not leased. Because that's where basically the gold that would have to be in my possession is leased to somebody else and also used to back something where you believe, you own something. In our case, it's actually legally impossible for us to do because we sold it to you, so it's not on our balance sheet. Sometimes people confuse these things. So it has nothing to do with leasing. It's giving you a way to get liquidity out of your gold or silver. Or we have some clients which basically might not be buying gold or silver. They just like to lend out and get like 3 or 4% very safe return on, say, US dollars or euro. And have a 200% gold-backed loan, basically. So some clients are on the lending side, some people are on the borrowing side. And it's interesting things happening. I mean, the Australians traditionally have very high interest rates. So if they have some gold, why not take a loan at 3% in Singapore, and you pay off your mortgage at 8% in Australia? At least that's how it used to be. Nowadays it's low interest rate. It's all sort of havoc, but you can see there's a lot of uses to it. So the system has been around for about over 4 years now, maybe 5. We had, I think, about 7,500 loans. We're having 3 or 4 per day. Some of them might be as low as $3,000. Some of them might be $700,000. We had about, Singapore dollar terms, I think 240 million, which would be maybe 180 million US, something like that in volume. So it's serious. It's some liquidity in it, and it's some people transfer gold to us just because they want to use the system and get a loan.
Excellent. So, Gregor, with all these projects that you have going on, I know that you're also a director of Palisades Gold Corps, which is still a private company. So, how do you, or what are the advantages to you to spending some of your, very, very precious time per month on being a director of Palisades?
Well, I mean, Palisade, I mean, the main person behind it is Colin. And, I think I've known Colin for 9 years, 10 years. And I've been at his conferences, and we just sort of hit it off. And so Colin is in a very interesting part of the market, which is basically the junior miners. And frankly, it's something I always had a big interest in. I mean, watching people trying to get mine gold in Alaska and so on TV. And of course, there's a fascination there, and also a desire to invest in some of these stocks. But, especially in junior miners, you really have to know what you're doing. And I just don't have the time or understanding to know what I'm doing. So when Colin started making this fund and so on, I always had an interest to participate in some way, shape, or form. And it's been a great journey. And I think, between Colin, we both trust each other, we both like each other, we get along, and we kind of respect each other. So when he offered me the option of having a position on the board to basically help overlook things, why not? I mean, it's a great opportunity, and it gives me an insight into this part of the gold industry, which I'm not in as much. And at the same time, it gives Colin a bit of an insight on the bullion, the trading and the storage side of things. So it's sort of win-win, and I'm really happy that I had the opportunity to do that.
Mm-hmm. Excellent, Gregor. As we wrap up here, do you have anything else that you'd like to leave our audience with?
Well, I think 2021, will be a year of construction for us as we are renovating this vault, and we have some plans on what it's going to look like. And I'm itching to show people, but it's not final yet, and we're still trying to figure out if we can get the cost down and actually build it the way we want. But assuming that's all going to come to pass the way we like it. By 2022, I think we can make a meaningful sort of contribution in the bullion industry. Instead, we'll have some really large capacities, and with the scrum chain system, which I'm planning to move towards, and integrate things and have testing systems and so on go in. I'm thinking that we can create a standard, and I'm hoping to get people excited about this. And my other part is, 2020, this decade is going to be a decade where gold and silver is going to play a major role one way or another. And, for people watching your show, I really recommend that you look into these things, you read about it, and you take some of that wealth and take it out of, currency, and you put it in something like gold and silver or some other physical asset, land, or whatever you need to know. But don't leave it all in US dollar denominated, assets. And just like Ray Dalio said, cash is trash in some ways. And, do it, because when you never know when something bad is going to happen, it can happen very quickly. And when it does, it's going to be too late. So get prepared.
Excellent advice there, Gregor. Of course, we can find more about you at silverbullion.com.sg and also cash.gold. And we'll put all those links in the show notes. Thanks very much for your time today, Gregor.
Yep. Thanks for having me.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.